now going to move on and look a little bit at what these kind of consumers want from their banks and what they need from their banks. Senthil, let me ask you, at the moment, we've just chatted just a little bit then about some of the channel strategy. How well equipped are high street banks at this moment in time to deal with these consumers? What do they need to do?
First thing is, I think the banks need to understand and profile these consumers in their existing relationships. Many of the high street banks do run student accounts, but I think I have a son who is in university, but the conversation that goes on between him and the bank is very much limited to what is the product that they can sell rather than the product that he is looking for. Mm-hmm. For instance, he's just moving out of the accommodation that the university gave, and he's going to move to an independent shared accommodation. But the bank did not capture that transaction in January, where all the university students were going, and then I had to fund him for that. But that was a great opportunity for the bank to have that conversation. And these are things that are coming up in the conversation that the students are using today in their daily life, like in the Facebook or the LinkedIn or any of the other social media pages. So they are discussing these. But listening to those is a very important function within the bank now, so that they can be clued on to the conversation and then introduce that service or have that link to a product or service that is needed at that point of time, and then probably take it into the life cycle.
Mm-hmm. Well, you just mentioned the keyword, the life cycle there, and as we know, banks develop products to fit obviously with the life cycle of their consumer, but as you've alluded to with the example of your son at university, the life cycle and the life stages, one assumes, of the so-called Generation Y is different from their parents. Can you maybe elaborate a little bit more on the sort of demographic and life cycle changes and what the banks would increasingly need to capture?
I think there were distinct milestones in the earlier generation that you entered with a proper definition, saying you entered the university, you had a plan, then you executed on that. But I think the changes that the youngsters are going today is quite dynamic. So they are anything ranging from a few £100 to a few $1,000 decisions to be made during the year. So some of the products today are tailored to beginning or end of that milestone that was defined earlier. But ongoing conversations will help them tune to some of the requirements that they have during the year. So it is not only connecting them, but it's also connecting the parents up into the same conversation, because by and large the family supports the younger generation still. So there's a lot that can be achieved in that cycle of events. That the second part of it is the association that the younger or the Generation Y has with the other brands is much higher. So even being present amongst those brands which are already associated or they associate with is important for the banks today.
Okay. Let me move you on a little bit there. I mean, one of the things that I always associate with the sort of Generation Y conversation is the art of customization. So if we look at the sort of experiences in the native digital kind of universe, you see that there is a lot of customization. I mean, the iPod is all about the capacity to customize, your list of songs, and iGoogle is about the capacity to customize your homepage and have, bits and pieces of what you want. What are the implications of this expectation of customization, for the type of products the banks are going to have to deliver for this generation?
I think that's an excellent point you touched on. The ability to disassemble and assemble components to your preference is the important underlying structure. And that is what has driven the success of the brands that you just talked about. So even in the financial services marketplace, the ability to offer or disassemble products and then assemble products to their individual preferences is what is required. First is the availability of those services, so you can pick and choose from a variety of offering, and even competitive brands at times offering two complementary services. The second is how they are offered, where it is offered is another important criteria. Where traditionally people look at going to the bank and getting that product, but is the bank available somewhere else where the customer can execute that transaction? And the last bit it is about acceptance. Gone, I think, are the days. In the future, you will never see a customer waiting for weeks or months to get something processed. I think days are even too longer. People would like to have an instant response in minutes saying, I did this application for a deposit or for a loan. I want an instant response, yes, and I get a credit, or I'm able to pass the transaction or deposit the amount for that interest at that point of time. So people do look at the ability to fulfill the transaction within that very short span and not wait for some of the events that has to happen. So you will have to at the back end completely disassemble yourself or decomponentize and recomponentize. So you have to disintegrate and integrate to a customer. That is an important step in the process. You cannot keep it as a full box service and expect people to pick that box or a collection of service in that box as the preferred product. It may not happen in the future.
It's very interesting you say that, because I recently applied for a credit card with someone who shall remain nameless, and you do the online application, so you think, wow, this seems quite intuitive. And then you wait for ages and you get an email telling you that, thank you for your application, we'll send you information. And, you're waiting forever for the post to deliver information about whether or not you've been accepted for the credit card. And then when that doesn't arrive, it transpires that what you inputted online, that ends there. That information is not automatically pushed into any other system. And I found that very peculiar and frustrating, and I almost terminated the entire transaction because I felt like it was so slow. It was so frustrating for me.
Yeah.
And so for those kind of providers, what in terms of what are the implications for their operational infrastructure to try and increase that speed and integrate those processes?
I think you got to move a step back and look at how that transaction happens today and how you would like to happen in the future. And I think one good example that I can quote here is a customer in Australia who actually implemented it. This is the online bank of National Australia, which is called UBank. Their whole proposition is based on an experience that you can deposit money within 5 minutes. And they fulfill that promise by drawing out the customer in conversations. They use YouTube, they use LinkedIn, they use Facebook, they use Skype to have an online conversation with the service. And they completely change the interaction model for those who come into when their product comes into consideration. And then they say, okay, fill this out in 5 minutes. If you're an Australian citizen, above 18 years, you can instantly drop the money into the deposit account. So I think you need to look at what is the service delivery model and you keep up to that promise. And this experience of yours with a credit card account doesn't seem to have gone that far. Instead, just use web as a medium to attract you, but not take that step forward in terms of delivering that within the same time that you went in and fulfilled that application. Mm-hmm. So that's a big gap now, and that needs to be fixed for taking the conversation to action and then finally fulfillment.